The following is a presentation of TFNN.
Let's go to our first call of the day. We'll talk to John in Austin, Texas. How you doing today, John?
Way too good, Ken. Appreciate what you're doing. You do such a great job. This show is fantastic every day.
You're a good man, John. Really appreciate it. Thank you.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, everyone. Welcome to another edition of Breakout Investing on TFNN. Ken Shreve with you. 877-927-6648. That's the number to use if you want to give me a call. You can catch my show daily on TFNN from 3 to 4 Eastern, just ahead of the Tom O'Brien Show. You can get my show as a podcast on iTunes if you can't listen live. And don't forget, very easy way to listen to all TFNN programming these days is on your smartphone. Just open your smartphone browser, type in tfnn.mobi, and you can listen to the stream 24/7. And the daily reminder, don't forget to check out Tiger TV on the homepage of tfnn.com, Channel 1. The show is carried live. It is archived on Channel 13. And with Tiger TV, not only do you get the show audio, but you can also look at charts right along with me. If you want to look at Tiger TV on your handheld device, just open your smartphone browser, type in tfnn.com. Over on the right-hand side of the homepage, just click the box with the 3 cell phones in there, and it'll start streaming on your phone. Volume on the New York Stock Exchange and NASDAQ today tracking just a hair higher than what we saw yesterday on the NASDAQ, which was 1.87 billion shares. We had another nasty day of distribution in the major averages on Monday. So you've got these distribution days, higher volume declines becoming very prominent in the major averages here. We had 2 very bearish days for the market last week on Wednesday and Thursday, low volume rally Friday, and then another higher volume decline on Monday. So stocks are in rally mode today. Volume, like I said, pretty close, just a little bit higher than Monday. NYSE volume on Monday was 812 million, so again, tracking just a little bit higher than that today. Checking in on the NASDAQ Composite, initial support, a very slight break below the 50-day moving average today, hit an intraday low of 31.05. It is now trading near its high for the day, up 12.5 points, 0.4% gain to 31.29. So let's a look at the NASDAQ Composite. The S&P 500. Let's check in on the benchmark index. It too is up near its session high. Came close to its 50-day moving average, didn't quite touch it. S&P up a little more than 8 points to 1496. And then the INDU. Let's check in on the Dow Jones Industrial Average. It's still holding above its 50-day moving average as well, up 106 points, outperforming today, last trading at 13,890. We did have Ben Bernanke testify in front of the Senate Banking Committee today. Did he kind of refilled the punch bowl, I think you can say, kind of let people know, kind of calmed market fears that easy money helicopter Ben is not going anywhere anytime soon, not with the economy looking the way it is. Definitely signs of improvement, but the easy money policy is probably going to be here for the time being. Among other things, Bernanke said the upcoming sequester, that's the big spending cuts that are set to take place, will likely be a significant headwind to the economic recovery. He also said a slower recovery would mean less deficit reduction. So all in all, Bernanke chose his words carefully today in testimony in front of the Senate Banking Committee. As a result, you've got a decent rally in the market today. Checking in, the U.S. dollar index up 0.2% to 81.84. April gold settles at $1,615.50 an ounce, up 28.90. 1.8% gain for gold today. April crude oil down another 48 cents, 0.5%, settles at 92.63 a barrel, the lowest close for a front month contract since late December 2012. check in on a couple of energy names here that still looking interesting here. There's a small cap name we've been following, fast-growing oil and gas producer, Bonanza Creek Energy, market cap of, I think it's around 1.4 billion. Thereabouts. Let me just double-check the market cap for BCEI. 1.3 billion dollar market cap company, but company has not reported fourth quarter earnings yet and don't have an earnings date for the company. I suspect it's going to be soon, but you see here initial support at the 50-day moving average, outperforming nicely today, up 2.4% to 32.60. And did you see that quarter from SLCA? Let's check in on SCLA. This is, I think that's it. Hold on. U.S. Oh, this is going to be tricky to find here. U.S. Silica. Nope, that's not it. Let's see. SL. Oh, there it is. U.S. Silica Holdings. Thanks for your patience. All right. Big gap up for U.S. Silica Holdings, up 18.9% today to 21.80. This is a company, its big customers are oil and gas drillers who are involved in fracking. Fracking involves the fracturing of shale rock to open cracks, allowing oil and gas to flow more freely so the drillers can get at it. The numbers at U.S. Silica Holdings were outstanding. Earnings up 41% from a year ago to 41 cents a share. Sales up 42% to 118.8 million. So good day for U.S. Silica Holdings. And what else do we have going on here? Bond yields, 10-year note, off session lows, still lower, 1.88%, 30-year bond. Lower as well, but off session lows, 30-year bond yield at 3.08%. Let me check in and fix this chart issues that I'm having here. This sometimes my laptop here, for some reason, is just changing the resolution. It's probably going to keep happening. I'll try to fix it when we head into the next break. So if you're watching Tiger TV, bear with me on the chart resolution here. We'll get that fixed at the next break. Okay, economic data. Pretty busy morning of economic data. The Conference Board came out with its latest reading on consumer confidence. It came in at 69.6 in February. That was well ahead of the consensus estimate of 62. So stocks maybe getting a little bit of a bid from that better than expected reading in consumer confidence. December Case-Shiller home prices up 0.2% from November. December prices rose 6.8% from the same period a year ago, the largest annual gain since July 2006, with increases in 19 out of 20 cities. The only city that showed a decline was New York City. The biggest percentage gain was in Phoenix, Arizona. We also had new home sales data, much better than expected, up 15.6% from December. This was January new home sales, so up 15.6% from December to 437,000 units. The estimate was for 383,000, so much better than expected data there as well. You'd expect to see a rally in the home builders, and that is exactly what you are getting. The ITB, iShares U.S. Home Construction ETF, still a lot of technical damage here done to this ETF over the past few weeks. Crashed below its 50-day moving average yesterday, trading up near its session high in pretty decent volume, but still underneath the 50-day moving average here. ITB last trading at 22.12, up 3.7% on the day. Other home builders on the move. Pretty good rally among all the home builders today. Ryland Group, basing consolidating gains. Does it kind of form a bottom here and eventually start forming the right side of a base? We'll have to see if that plays out. It's possible these home builders could, form proper bases again and eventually break out to new highs. We'll have to see, but that story has far from played out yet. Ryland Group up 3.4% to 34.79, and also Lennar having a good day in decent volume. Shares of Lennar up 3.4% to 37.90. So not real keen on the home builders here. They've made massive runs since the summer of last year. They're all building bases now, so we'll just have to see what these bases look like over the next few weeks. And it's possible that new buy points could emerge, but that is going to take a while to play out. So we're kind of avoiding the home builders for now, despite a solid day for the group today. In the home building sector, we did have good earnings today from Home Depot. Take a look at shares of Home Depot having a great day today, up 5.2% to $67.25. This was a very, very strong earnings report across just about every metric that I follow. Earnings up 34% to 67 cents a share. That was 3 cents better than views. Sales up 14% to $18.25 billion. That was more than that was well ahead of expectations of $17.7 billion. So nice sales beat for Home Depot. Same-store sales up 7%, solid there. Gave a good outlook for 2013. It forecast full-year earnings of $3.37 a share. Analysts were at $3.05. They announced a big stock buyback, a dividend hike. They raised their quarterly dividend 34% to 39 cents a share. So very, very nice numbers from Home Depot earlier today. Stock is bouncing back after a really crummy session yesterday, but good day for Home Depot. And the sellers have been in lumber liquidators. This is another specialty retailer. They operate hardwood flooring stores. Has been under a tremendous amount of pressure headed into today for the prior 3 sessions, but it hit a low today of 53.73, now trading at 57.73, up 5.4% on the day. Decent volume behind the move today as well. Looks like it's going to come in higher than Monday's total. So nice rebound for lumber liquidators. And then sticking in this the sector, let's take a look at some of these mortgage servicers. We're going to hear from Ocwen Financial on Thursday later this week. They're going to be coming out with earnings. It is trying to break a looks like a 7-session losing streak. Headed into today down for 7 straight sessions. It is rallying with the home builders up 2.8% to 37.28. Again, earnings due Thursday. Look for a profit of 51 cents a share. That would be up 82% from a year ago. Sales up 46% to $228 million. And also Nation Star Mortgage Holdings. I don't have any earnings data from them, but they're going to be coming out with earnings March 7th. And as you can see, Nation Star still holding above its 50-day moving average. So in a market environment where there are a lot of ugly charts out there, Nation Star has just paid a visit to its 50-day moving average, finding support so far. 877-927-6648. Headed into break number 1. Stick with me, folks. We'll be right back. Breakout Investing on TFNN.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Ken Shreve with you. Thanks very much for tuning in. Let's check in on the markets here. We've got a little more than 35 minutes left to go in Tuesday session here. The Dow up 101, maybe 102 points to 13,885. NASDAQ Composite up 8.5 points, lagging today to 3125. The S&P 500 up 7 points to 1495. So that is where we're at. We'll see if this turns out to be a dead cat bounce or not. I think we're eventually going to have to pay very close attention to the 3 higher volume declines that we've seen in the major averages since the middle of last week, when distribution professional selling starts to become pronounced in the market and you see a lot of leaders rolling over and showing abnormal price and volume action. That is normally the time to get defensive and start heading for the sidelines. So the Ultimate Growth Stocks model portfolio, we currently have 4 open long positions. One of those is a short position, but we have been scaling back over the past couple of weeks, and not really interested in being overly exposed to stocks at this point. We think that the yellow flags had been out there for a while, and then again with the higher volume decline seen in the market last week and a very, what could only be described as a very bearish day for stocks yesterday, that ultimately has to be heeded. So at this point, we're just going to wait for renewed signs of accumulation in the major averages as possible. We could see day one of a rally attempt today, for example. Keep in mind that the major averages have not come in that far off of their recent highs. You're talking gains of 13, 14% from mid-November up to the recent highs for the S&P 500 and NASDAQ. So 14% gain, you get a 2 to 3% pullback. Normally, you want to see a little more consolidation. You want to see indices consolidate gains for a longer amount of time than just a few days, because that digestion process normally should take at least a few weeks. Economic data for the rest of the week. Tomorrow we've got durable goods orders for January, pending home sales for January. Thursday, weekly jobless claims, the second estimate to fourth quarter gross domestic product. You can bet that one is going to be closely watched. The first estimate, if you remember, showed contraction of minus 0.1%. The second estimate is the consensus estimate is for growth of 0.5% for the fourth quarter. So we'll see where that ends up Thursday. Also, Chicago PMI, and then Friday, personal income and spending. The final reading from the University of Michigan Consumer Sentiment Index for February, and the ISM Manufacturing Index. That'll be a big one also on Friday. Let's check in on some earnings stories here. Mindray Medical, ticker MR. This has always been an interesting company, and technically it is looking pretty strong here, and that means it is worth keeping an eye on. Its swing point is 38.79. 38.79. That's going to be its intraday high on January 30th, right in this area here. You see that Mindray Medical came down to its 50-day moving average recently, is working on 3 straight up days. So and again, it's a stock that is showing probably more signs of accumulation than distribution at this point. It is based in China. They make patient monitoring, life support systems, medical imaging systems. So it's a medical device maker, but pretty good fundamentals. This time around, their sales were up 20% to $316.1 million. That was nicely ahead of expectations, and earnings were up 16% to 51 cents a share. That was 7 cents above the consensus estimate. So nice numbers from Mindray Medical after the close Monday. And let's take a look at CHUY. CHUY. That's going to be a small cap restaurant called Chuy's Holdings. And we'll see that kind of a wild day of trading for the stock. It came all the way down to its 50-day moving average at 25.81 and now has bounced. It's up near its session high, trading at 28.75. So more than a 3-point intraday swing for Chuy's Holdings. Stock right now up 3% to 28.75. Earnings up 150% from a year ago to 5 cents a share. Sales in line, up 40% from a year ago to $46.7 million. This is a speculative restaurant name, but there's a pretty compelling growth story here. They operate Mexican restaurants in Texas and the southeastern U.S., but small company, market cap of $460 million, and pretty thinly traded to average daily volume about 200,000 shares. We'll be right back, folks.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Thanks very much for tuning in. Let's go ahead and take a look at the major averages here. We have got the Dow Jones still up 107 points to 13,891. 13,891. The NASDAQ Composite underperforming today, finding initial support at its 50-day moving average, up 11 points right now to 3127. And the S&P 500 trading up near its session high, up about 8 points to 1496. So we'll see how long this rebound lasts. Again, it's a market that clearly is showing some distribution here, and normally when you see weak action in leading stocks and distribution days start to increase in frequency in the indices, it normally takes a little while for that selling to run its course. So I'm in the camp where I'm expecting more downside here, but this market is as deviant as ever, and we'll just have to see. We'll have to see what coming days look like here. Take a look at some other earnings stories today. Wanted to check in on AMC Networks. This stock has done very well. It's a cable network company that a lot of their success has been due to shows like Mad Men, Breaking Bad, and The Walking Dead. However, this time around their earnings report was pretty weak. They announced earnings of 21 cents a share. They were supposed to earn 65 cents. So it was a big miss on the bottom line. Earnings fell 48% from a year ago. Sales up 8% to $366.7 million. That was about $3.3 million below the consensus estimate. So earnings and sales miss at AMC Networks, and that has brought sellers out in the stock today. It's down 3.8% right now to 55.88, but at one point today the stock was trading at 50, so it is now $5.88 off its intraday low and actually back above its 50-day moving average here. So kind of a wild, volatile day of trading in AMC Networks, but trading up near its session high. Let's check in on American Tower, AMT. This is a cell phone tower operator, arguably the leader in its space. Been under a lot of selling pressure basically since late January. Fell below its 50-day moving average several weeks ago. Still trading underneath this support level, but having a good day today, up 2.6% to 75.55. Good. Actually, a strong top-line beat. Their sales came in at $768.4 million, up 18%. That was much better than the consensus estimate of $742.5. Earnings did miss at 34 cents a share. That was 8 cents below the consensus estimate, down 35% from a year ago. International sales did pretty well at American Tower, up 36% to $240 million. So buyers in the stock today. But, another stock out here that is building a base. Look for resistance at the 50-day moving average at 76.89 for this name. Also, auto parts retailer AutoZone, AZU. AutoZone touches its 200-day moving average. Today it is above that support level for now, down $2.35. 0.6% to 376.19. One of these high-priced stocks out here. They beat the consensus estimate by 2 cents with profit of $4.78 a share, up 15% from a year ago. Sales a little bit below expectations at $1.85 billion. Same-store sales disappointing, down 1.8% from a year ago. So a very lackluster quarter at AutoZone. They blamed a warm winter and also some tax delays and tax returns, something along those lines. So kind of a lackluster report from AutoZone. Then we had a couple of department store operators out as well. Good day for Macy's. The stock is up 3% to $39.68. Earnings beat on the bottom line. Sales also a little better than expected. Macy's and J.C. Penney are locked in a lawsuit right now that is currently going on. The suit alleges that J.C. Penney violated Macy's exclusive deal with Martha Stewart. And again, this trial is underway. And really what is at issue here is whether or not Macy's has the exclusive right to sell some of Martha Stewart's branded products like cookware, bedding, bath items, things like that. So anyway, Macy's having a decent day on better than expected earnings, and Saks also having a decent day as well. Last check, it was trading higher. It is up 1.4% to $11.19. Earnings a little better than expected. Sales a little better than expected as well at Saks. And you can see here a little bounce off the 50-day moving average, and not a bad day for Saks either. The bad earnings report of the day award would have to go to Vitamin Shop, and the ticker here is VSI. really ugly earnings report from this company. They sell vitamins, nutritional supplements, health and beauty products, very similar business to GNC Holdings, but they missed earnings and sales by a country mile, and stock is down 18% as a result to 51.65. Talk about a stock really not showing much in the way of sell signals at all headed into earnings, but the earnings fell 8% from a year ago to 35 cents a share. That was 5 cents below the consensus estimate. Sales only up 2% to $218.9 million. The consensus estimate was for sales of around $224 million. So well below estimates there. Let's check in and see how GNC is doing. Again, similar business. GNC Holdings. Down 2.3% to 40. You can see GNC just recently had a big gap up and a breakout over 38, and one of the better looking charts out there. So that is a look at GNC Holdings. After the close today, let's check in on shares of Priceline. This is always a closely watched earnings report. Shares of Priceline finding initial support at the 50-day moving average here. Another decent-looking technical setup here. Priceline up $6.17, 0.9% gain to $677.71 ahead of earnings. Look for profit to be up 22% to $6.54 a share. Sales up 20% to $1.19 billion. Other high-profile earnings reports to keep an eye on later in the week. Let's take a look at Salesforce. Salesforce has been under quite a bit of pressure. This is another one of these, market leaders that's just under duress here, shall we say. We took profits in Salesforce several weeks ago. We took partial profits and sold the rest last week, I believe February 21st. On Thursday, we exited the position completely and locked in remaining profits. That turned out to be a well-timed sell. The stock is down another 15 cents today to 163.36, underneath its 50-day moving average. When CRM reports on Thursday, look for profit to be down 7% from a year ago to 40 cents a share. Good top-line growth. That's one thing that Salesforce does quarter after quarter. They managed to deliver very solid growth on the top line. Look for sales to be up 32% to $830.9 million. And then CTRX, which is a provider of pharmacy benefits management services, holding near highs. Not much in the way of selling pressure here. It is down 43 cents to 54.52. It reports Thursday before the open. We've got CRM after the close Thursday. Catamaran, which used to be called SXC Health Solutions. The former ticker symbol here was SXCI. They're now known as Catamaran Corporation, but numbers should be pretty good at Catamaran. Earnings up 46% to 35 cents a share. Sales up 141% to $3.3 billion. Interesting action in shares of Chihu, 360 Technology. This is in a consolidation. Was looking like it was going to be able to hold its 50-day moving average, but some big sellers in the stock today. Seen some very cryptic headlines around Chihu that I just haven't been able to make rhyme or reason of, but the stock is down 4.6% today to 30.08. It does report earnings on March 5th. I believe that is going to be next week. Earnings are expected to be down 15% to 17 cents a share, but sales up 50% to $93.7 million. Chihu provides internet mobile security products. Earlier this month, a judge in China gave Baidu the go-ahead to proceed with a lawsuit against Chihu, claiming copyright infringement. So I'm not sure if this has something to do with the share weakness, but definitely some big sellers in Chihu today, and the stock is down 4.6% in heavy volume. Still seeing a lot of interesting setups out there. Not many, but stocks that are worth keeping an eye on here if this market decides to start heading higher again. Let's check a weekly chart here of Tractor Supply, TSCO. This company operates retail, farm, and ranch stores in the United States. Really like the look of this chart here. You can see it's been consolidating gains for a little bit over 2 weeks, holding above its 10-week moving average here. But the stock is sitting actually fairly close to a swing point of 104.83. So it would be an aggressive buy in a market that is under distribution like this one, but could possibly see a heavy volume breakout over a swing point of 104.83. That would be the high it's set back in this area here. But this is really what orderly trading should look like. It's pretty rare these days when you see a weekly chart that shows tight, orderly, non-volatile trading. But Tractor Supply setting up nicely here, behaving itself, holding above its 10-week moving average. Tractor Supply worth watching here. And let's also take a look at Shutterfly. Shutterfly is ticker SFLY, and you had a big gap up for Shutterfly earlier this month on better than expected earnings. I just love how the stock is really kind of forming a flag here. You see these just tight sideways trading here. Each close very close to the prior week's close. Wouldn't be surprised if stocks find their footing again to see Shutterfly perhaps make a run at its recent swing point of 42.67. So this is another one to keep an eye on here. Very strong technical picture, and definitely one to keep an eye on. Sales growth accelerated nicely in the fourth quarter when they reported earnings earlier this month, and I think sales were up 33% to $351.8 million. That's the data that I'm showing here. So Shutterfly looking pretty strong here. And let's also check in on Netflix, because Netflix is another stock that is behaving itself in an unsettled market, holding gains above its 10-week moving average here. You'd think a nasty market pullback, Netflix would come down to its 10-week moving average, but it's trading right now at 184.81, and its 10-week line is all the way down at 145.50. So I suspect what we'll see Netflix do here is just move sideways for a few more weeks, and definitely one to keep an eye on for more price strength. I like Netflix's story. It's been an incredible comeback for a company that had been dogged by a lot of negative headlines, particularly in late basically since the summer of 2011, and its downtrend was pretty bad in the summer. Starting in the summer 2011, it was a laggard for most of 2012, and then starting in September, October of last year, the stock really started to rally and had great earnings recently from Netflix. So another solid name worth watching here. Also like how Celgene is holding on to its gains here. Celgene, highly profitable biotech here. Weekly chart of Celgene shows just tight trading. Looks like I would expect support to be pretty solid at the 10-week moving average at 95.74. So just stocks that are stubborn about giving back gains in a market that's under distribution. Sometimes these are the first out of the gate when market conditions improve. So while I'm a believer that we're probably going to see a little more downside in this market, some of these names that we're going over right now are stocks that that could work down the line. So definitely worth paying attention to. And then we'll end on Cerner. This is a healthcare IT name that also showing very tight trading in its weekly chart here. Wouldn't be surprised to see Cerner be a leader going forward. Headed into the final break, folks. Check in on the markets one more time. We'll do that soon. Be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just 1 position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks. Looking like we're going to get a close near session highs for the major averages. Today, the Dow getting stronger as we head into the close here, up 133 points. Call it a 1% gain. For the blue chip index, 13,917. NASDAQ Composite up 17 points, 0.6% to 3133. S&P 500 up 11 points, 0.7% to 1499. So we'll see if it can reclaim that 1,500 level. checking in on volume here. Volume in the market. At last check, we were tracking just a little bit higher than Monday session. Right now, NASDAQ volume tracking pretty much exactly to what we saw yesterday, 1.87 billion shares. NYSE volume, same thing. We'll probably come in pretty close to 1.87 billion on the NASDAQ, come in pretty close to 812 million on the New York Stock Exchange. So we will see where we end here. Don't forget, I did publish the latest update to Ultimate Growth Stocks. It comes out every Tuesday, so if you want to check out a trial to my newsletter, you can do that right on the homepage of TFNN.com. Just click on the Newsletters tab on the homepage. After that, click on Investment Newsletters. You can check out 30 days free. Again, we are long 3 names, and we are also long and index short ETFs. So, but overall, don't have a lot of exposure to the market, which is, I think, where we need to be right now with so much uncertainty out there and pretty clear signs that institutions have been selling stock in recent days. So, but when I go about initiating coverage on a growth stock, I use a combination of fundamental and technical analysis when evaluating a stock, and then I use technical analysis alone to help me decide when to sell. We've been taking profits in recent days, started last week, taking some money off the table, and feel pretty well positioned right here. Don't have a lot of exposure, which I think is the right thing. Coming up after the close today, let's take a look at some other companies set to report. First Solar, FSLR. First Solar is looking to extend its losing streak to 5 sessions today, so a little bit of apprehension. First Solar's been a pretty solid performer in the market, but looks like it's down for 5 straight days here. Now trading just underneath its 50-day moving average here, and so the last quote for First Solar, 31.29, down 4.4% on the day. So a little bit of anxiety ahead of earnings. Look for a pretty strong quarter of growth here. Profit should be right around $1.76 a share, up 40% from a year ago. Sales up 101% from a year ago to $1.13 billion. We're also going to hear from Jazz Pharmaceuticals. Jazz Pharmaceuticals. This is a company that's involved in narcolepsy, which is this affliction that people just fall asleep instantaneously. So Jazz up 1.7% ahead of earnings to $56.99, and earnings here are expected to be up 21% to $1.42 a share. Sales up 120% to $183.8 million. So that is a look at Jazz Pharmaceuticals. Very strong fundamentals here, and technically, holding up okay. Fell below its 50-day moving average earlier today, but trading up near its session high. So we'll see what Jazz Pharmaceuticals has to say. And Priceline also after the close tomorrow. More retail earnings. Dollar Tree, Target, TJX companies. All those companies due before the open. Coming up next, the Tom O'Brien Show. See you back here tomorrow, folks. 3 o'clock Eastern. Another edition of Breakout Investing. Have a great day.